Okay. Welcome to this week's market review and opportunity discovery. We are actually, surprise, surprise, we are in the very last week of the earnings season from the spring. There are actually two opportunities this week. There's actually a couple of earnings left here the next couple of weeks, but really there's only two opportunities for the way we've played these opportunities in the past. Anyway, this is a weekly webinar that I'm putting on to do a market review and opportunity discovery. When we get into earnings season, we also will review the earnings opportunities for the coming week. I'm going to keep these things to 1 hour and hopefully not longer, at least for the recording. Everything is recording and then will be posted to the premium subscribers of Green Goose Trader. So welcome. To start off with, I do need to go through a disclaimer. Green Goose Trading is not an investment advisory service. We're not registered investment advisors or broker dealers and do not report to tell or suggest which securities customers should buy or sell for yourselves. Always check with your licensed financial advisor and tax advisor to determine the suitability of any investment. It should not be assumed that the methods, techniques, or indicators presented in these live streams will be profitable or that they'll not result in losses. Past results are not necessarily indicative of future results. And then the examples presented in these webinars are for educational purposes only. These setups are not solicitations of any order to buy or sell. The authors, myself, publisher, and all affiliates assume no responsibility for your trading results. And as you know, there is definitely a high degree of risk in trading. So, okay. As always, I always start off with money management. It is the most critical part about trading. If you don't have money management down, it is almost impossible to be successful long-term in the marketplace. We always talk about what losses are. I think it's very, very important to be transparent about what happens when you lose and when you lose, and have a full understanding of no one can win all of the time. But what matters is taking away more than you lose. Okay, so I don't want to lose more than 2.5% of my account. I've got several accounts. I've got an FX account. I got futures that I trade, and then I also have an options account. I define my options account with a certain value, and I do not want to lose more than 2.5% of that particular account. What that does is it gives me 40 chances to be wrong. Okay, and then the other side of things is when I am position sizing to a certain risk, meaning R, my goal is to take away at least 2 times R over the long term, and that is called a profit factor. I have a certain goal and certain numbers that I have over time that are defined as a win-loss ratio, but I also have a goal for my profit factor. I want my profit factor to be a minimum of 2. And if I'm going below 2, I need to actually reduce my position size. Okay. Anyway, very, very important. We all lose money every week, every day, but we need to make more than we lose. Okay, so if you're losing money, or if people do lose money in the market, it's really because they don't have rules before getting into a trade. I know we have a few people on here that are professional traders, professional day traders, and they may or may not have a written system, but I know one guy, Alan, you know what you're doing. You've got your rules in your head and you've been trading them for many years. So you got to have rules. Don't let your losers run and don't cut the winners short. Okay. And definitely don't go all in desperation. So here at Green Goose Trader in these webinars, the way I'm planning it anyway, is I'm always trading to a plan. I have written trade plans. I get up in the middle of the night at the end of the market day because I live in Asia. And I've got my plans up on the wall. I can look at them and I can say, yep, I'm in that. And it just kind of gives me a quick reminder. I'm never going to lose more than 2.5%. and I got to call it a paper trading account here. I'm basing the official Green Goose traders options account as a 10K account. Obviously, I may well, I do have more than that in my account. My risk to reward goal is always going to be a minimum of 2 to 1. So if I'm position sizing, basing the risk, meaning I will take a loss of 50%, my goal is to earn 100%. Okay, so I do consider all-in trades. All-in trades for me basically means that I'm willing to lose 100% of the actual position. A lot of the earnings plays that I do with the Iron Condors are all in. I do not use more than $250 or $300 in that paper trading account. Swing trading, it's the same thing. If we are position sizing with $500, I don't want to lose more than 250, so I'm going to take a loss at 50%. If I'm in a position size of $1,000, I'm not going to lose more than 25%, meaning $250. However, I do take all-in trades, as mentioned, with the $250. That means I'm willing to lose it all. I'll let it go a little bit longer. My stops also are based on technical violation of those trade plans. And those of you who've been with me for a while know that I define it. I look at myself and I say, this is what I'm going to get out. If this is violated, I'm going to get out. And there have been times where I don't do that and I get into trouble, and it's not a good thing. I put myself in the naughty corner afterwards. And I always try to take partial profit at 2 times my risk. So if I am risking $250, I'm going to at least take partial or part of that position size or part of that position off when I reach a $250 profit on the entire position. Okay, and then I'll try to move my stop. Okay, so anyway, my take on the market this week. First of all, we're closed on Monday for Juneteenth. Okay. Now, so that sets up a short week. I'd actually completely forgotten about that. I'm not sure if we had that last year, but I think it was certainly a recent past where Juneteenth is a market holiday. So I'm actually kind of looking forward to having an extra night's sleep this evening. Yeah, it's new this year, NAC says. Okay, so where's the market been? We've been down 10 of the last 11 weeks. I think everyone knows we're in a bear market. We've known it for a while, but they're finally defining it last week as a bear market. The characterization of this particular market, as far as I can see, and then all the pundits out there, all the financial entertainers of CNBC and everything are saying, it's we're in a tough market, and we know it. There's been a lot of people losing money and a lot of people bailing. The past week had strong momentum on the down days, and they had really weak bounce, very, very weak bounces. The way I liken it, think about dropping a ball on a table. You've got you're dropping from a height. The ball doesn't bounce all the way to where you started from. It bounces a little bit, a smaller distance, and then it just keeps bouncing smaller and smaller. And then the big question is whether that is a cliff or a table, and then you just fall off the edge again and bounce again. Now, bear markets always reach a bottom eventually, vice versa for bull markets as well. I want to trade with the trend. I really don't want to call bottoms or tops, but my gut feel is that definitely the bottom is near, at least temporarily, but really is only going to be confirmed this next week or two with a basing pattern. And you've seen me put that out for a while as far as what I like to see as far as low basis. You start getting consolidation. But there is definitely the question, is there another cliff coming? And I don't think that we're done. I mean, it's we could get that consolidation. After the consolidation, the basing pattern, it may be that we go up a little bit, sometimes called a dead cat bounce, but also I guess what we call a bear rally, or rally up a little bit. It sucks in a lot of people, and you start going down again, and you get that cliff, and you get the next leg down. So I'm really kind of in this limbo mode as far as trading, and as you're going to see in another slide coming up, I'm really kind of in this cash mode. I'm totally happy having cash and not having it deployed for the most part, at least in my longer term swing trading account for options. As we know, we're always looking for, at least in swing trading, there's a lot of different steps that I take that I recommend that we go through a process. We try to make it structured. Number one, where's a stock going? I mean, if we've got a target stock that we're trading, is it going to go up? Is it going to go down? Is it going to go sideways? Or maybe it's going to move, but we don't know which direction. I have a strong tendency lately to focus in on very specific stocks when I'm doing directional trades. And then obviously my earnings trades are based on historical scans on what moves and what does not move with implied volatility crushes. So really, I want to see with my targets, can I identify a trend up, down, or sideways? Then number two, where am I wrong? If my prognosis is up, like Guild right now, actually my prognosis for Guild is not down and potentially going up. But where am I wrong? Okay, if that prognosis suddenly changes, when is that going to be? So define it. Where's my target? I've got a strong target for Guild, for example. I've got to actually target for FEZ as well. What is the target? And then also, when's it going to get there? But is ER in the way? Because we need to think about these things as far as volatility. Options are depreciating assets. So it's important for me to understand not only the target, but when is it going to get there so that I can use the correct expiry for the option so that I don't lose too much, or certainly the value of that option is not degraded as it is a depreciating asset that goes over time. And then what I want to do is I want to choose the most profitable and profitable option strategy based on 1 through 4. And a lot of you have seen me do this for those of you that have been around with me for a while. Write that trade plan, enter the order. Very often I'm entering orders actually after hours or certainly at the end of the day. Based on whether my trade plan is still correct at the end of the day. So I'll have a list of things that I want to get in at the end of the day. So when I wake up, I'll take a look at them and say, okay, is it still valid? Has anything changed or eliminated a reason to enter? So is there any reason to not get into it? And then I'll actually do it towards the end of the day, and then also monitor. So. Where is my current focus? As I mentioned, cash is parked. I've got cash parked in my U.S. equity options trading account right now. I am definitely dipping my toes into some very small position sizes, but I'm definitely absolutely balancing my deltas. I watch my deltas really closely. I'm kind of leaning towards delta neutral. I prefer actually to have a combined zero delta, but I have so few positions right now that having 57 deltas, for example, is really not that much. That means I'm slightly bullish from that perspective, but this is nothing compared to sometimes having a lot of positions or a lot of contracts where I might have 1,000 deltas. 57 really is not a lot. So my Guild long play right now is 81.85 and my FEZ play is negative 24.55. So 82 and 25 basically. So for a grand total of 57. I don't want to be in all long and I don't want to be in all short at this point. So I need to have some kind of balance. I'm also watching my gammas. Gammas, as you may have seen I think I put a video out or certainly an article on gamma neutral types of trades. Gamma neutral has a role when you're in an environment where volatility is very volatile, meaning that your VIX basically is going up and down a lot. Okay, it has wide swings. We can obviously gain IV goes up, but we also lose when IV goes down in our play. So we certainly, it mutes our gains and accentuates our losses if the IV goes the wrong way. So one way to deal with that is to manage your gammas and try to be a little bit neutral. So I'm doing that through spreads, a lot of spreads. Unless there's an earnings in between now and where I think it's going to go, and if that earnings is in the middle somewhere, because then the IV itself is not going to have as much of an effect. My question of the week, which actually is the risk of the week, is obviously is the trend going to continue, or are we going to get a reversal? I just don't know. Things are weak. I think that we need to consolidate. We probably need to go up a little bit, and I do have this gut feel that it's gonna keep going. I don't think we're done yet, but you know what? I'm wrong often. I'd say 35 to 40% of the time being wrong is often enough to say, hey, I just don't know where it's going to go. Okay, so before we go into taking a look at the market as a whole, there are the last earnings iron condors of the season, of the spring season, even though we're into summer. Actually, you could almost say that these are the first of the season, but they're actually the last. So FedEx is reporting, and ACN, Accenture is reporting. So I believe the 23rd is Thursday. So ACN reports actually before market open. So the entry on that is on Wednesday, end of day. For the past 4 earnings, there have been 4 wins and 0 losses with an average win of 31.5%. So got to watch out a little bit on the volume and liquidity on this. It's been somewhat okay, but it can be a little. It can be poor. So if the liquidity and the volume is not so great, I probably will not take this particular one. If it's average to, obviously if it's good, it's good. And it's easier to get into this. As it's on a Wednesday going into Thursday, I don't want to push the issue on this. So the exit on these is basically the 24 hours later. FDX reports also. They're on an aftermarket close on Thursday, on the 23rd, and over the past 4 ERs, there have been 3 wins and 1 loss. The average win out of the 3 wins is 48%. The 1 loser had 85%. Okay, so as you have seen in the past, when I go into an earnings iron condor, I am going into an all-in play. That means I am considering the potential of losing 100% of that particular play. And I'm going into plays that have a absolute minimum of 75% win-loss ratio, because then those wins can offset a single loss if the average holds true. Okay, so I'm really looking for a long term. I'm not looking at the one play itself, FDX, for example. I'm looking at the multiple plays that I'm making with the earnings iron condors over an entire season. In general, what I've found over the last couple of years is that if I stick to those that have had 75% or better win-loss ratio, the average win-loss ratio on everything with all the plays is going to be roughly 75%. And that's for me, that's a system. Okay, so these are 2 plays that I'm looking at very strongly this week. So we'll see where those goes. I mean, obviously we've done well this earnings season, and I'm just going to add these to the stats of this earnings season. We'll go forward. We'll be doing the same thing, by the way, starting next earnings season for all premium subscribers, and I'll be putting out the earnings iron condor list the week prior, as well as reviewing those particular plays in a live stream recording for those premium subscribers. So let everyone know that's not on here, that we're going to be doing that. Just for your info, we've got now 106 premiums, including some comp, and it's moving up quite nicely. I would say right now about 75 to 80% are not OP, that are not part of OP. So you know, we're going to be doing some other training videos that provide access, at least provide a little education to those that have not been through the swing trading and ER strategies course over at OP. Okay, so let's take a look at some case studies and see if there's anything out there. First of all, I want to take a look at SPY as a real quick down and dirty. You can see that SPY went into my little red box. Okay, and well, looks like there's a dividend paid. Where does that box come? That was actually, it's been a target of mine for a while. We got out of this consolidation phase here, and as you know, I use, and a lot of people use that are not OP. This is not exclusive to anyone out there, the 13 and 48 EMAs, but you can also use anything you want. So oftentimes I like to use actually the 20 to get a bigger picture, and the 50. Sorry, and look at the 20-50 crossover. 1348 is good. It's very similar to the 20 and the 50, but the 20 and 50 gives me a little bit of a bigger picture. Sorry, 50. And the other part I like to have on here is I do like to have the simple 200 moving average. You don't need EMA at that point. So let me just throw that on there so that we can see it. And for me, I'm always looking at trends. The trends for me mean we're in a downtrend, we're in a strong downtrend when the 20 is below the 50 and the 50 is below the 200. Okay, so, and that's kind of common knowledge out there. Okay, so obviously the trend is down. We're a stronger trend down, and we even now have the 200 moving average starting to slope down. So anyway, so where do these boxes come from? Well, I'm a big fan of zigzags. Okay, and zigzags for me are Fibonacci's. So if you really go and you start thinking about how, oh, by the way, this is the ADX, and for Alan, if you're on here, the ADX that I use for the bigger picture actually is not the settings that you use or the shorter term. My setting is actually a 13. Could use 14, which is standard, but 13 is a fib number, so I tend to like the 13. And I'll show you guys on Guild and FEZ how this kind of supports my thesis for those particular names. Anyway, when I do a fib, I go from a pivot high down to a pivot low, and I note where resistance occurs. Okay, and the resistance here actually occurred right around the 38.2. Okay, and the theory that I have, and I know there's a few other people out there, there's a guy named Rob Roy that I follow quite a bit. The theory is that if you have a 38.2% retrace, you're going to get an extension of 61.8% extension. If you get a 50% retrace, you're going to get 100% extension from that 50% level or from that pivot high. And if you get a 61.8% retrace, your target is going to be 100% extension from that bounce. Okay, so that's the theory. Okay, so TradingView's got a really nice tool, trend-based fib extension. And I think we all agree that we have a bounce on the 38.2. The big question is, and this is really kind of up to you or up to the trader, because targets can be a little bit fluid, is you can either take it on the 38.2 or you can take it at that pivot high. Okay, so what you do is you throw that on there, you go down to the pivot low, and this is going to set up your extension level. So my extension level can be right here, or I can take it from that pivot high. Okay, and if I take it from my pivot high, now the big question is, well, are we at a 50% retrace or are we at a 38.2, or kind of both, right? So I actually have two levels here, two boxes that I put, and it's the first one is considering a 38.2% retracement, getting a 61.8% extension, and that's this box here. But if this was a 50% retracement, then I would expect a 100% extension from the 50%, which is going to be right in this box. So I've actually got two areas. Like I said, I think it's likely we could get a bounce, or we certainly get consolidation. So you get this ball that bounces, boom, it comes down, it bounces, it comes down, it bounces a little smaller, then it bounces again, if there's going to be a cliff. So it's an open question for me right now on whether we consolidate and head back up into a zigzag from this, or if we consolidate and then we fall off a cliff again and hit this level right here. Okay, and if we bounce in this area, where would I expect it to go? I would expect it to go anywhere from 38.2 up to 61.8, which puts us basically in this region. And then it'll make a decision. So let me just change the color of that. Well, it will make a decision, and we can't control that. We just need to trade what we see and not what we want. I mean, my gut feel is that we're going to consolidate a little bit. If I'm not wrong, we'll consolidate a little bit in this region, maybe up until the next earnings season. I don't know. And maybe we'll come up and we could go up here, up here, up here. And then you note that you have your moving averages come on, and maybe it'll bounce there. And then we come back down. Okay, so that's really kind of where my gut feel is. But again, we could also, this could be completely wrong. We could consolidate and then fall off the cliff again. Or we could just plain do nothing. We could just plain go down, or we could go up. If it goes up, I still would not expect it to go much past this 20 EMA or 13 or whatever one you're following. I mean, right now we're a little bit oversold, so either we're going to consolidate or we're going to go up. So I'm really in a state of flux right now as far as what I want to do. I think that probably we're going to have some kind of consolidation, and what's that going to do to volatility? Is it going to make volatility go down? Okay, so you have the VIX, where we're pretty elevated. So if we start consolidating, the VIX is going to come down. Okay, but we are definitely range bound. But if we start going up, or if the market starts going down, I mean, we're gonna get a spike up here, right? Ideally, from a trader perspective, I'd love to see a downturn and get that VIX to go way up and be able to jump on as it does it. I would love to be able to see that VIX spike way up and signal pretty much capitulation, and then we can start doing whatever we're going to do over the time. I don't think it's going to happen right away. I really do think that we're going to have that consolidation. So we need to look at our trading from that perspective and understand that we're kind of in a time where it's a little, I mean, it's always unpredictable, but it's probably a little bit more less predictable right now for me, especially when you start throwing in the volatility side of things. And that's really important. For me, it's very, 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 very important. The volatility is going to affect profitability, and it's also going to magnify losses if volatility does not go the right way. So it's the added dimension to options trading that we actually don't necessarily have in other types of trading. Quite frankly, I'm focused on Forex because things are moving so much. That's where I'm making my majority of my profit right now. Anyway, you know, we've got a couple of earnings coming up, and we know that no matter what, IV crushes on earnings, and we can make profit. Okay, so the first one was ACN. That's coming up. You know, here's our earnings date. Earnings Iron Condor. Okay, they do right there. So we're looking at earnings Iron Condor. We'll see how far that goes and see whether we can get in. But you know, previous earnings, it will take a jump, but you really don't get much movement by the end of the day. You can see that, yeah, it took a jump, but you know, what's really cool about ACN is that the IV was so high that that was still resulted in a win for this particular one. Didn't move. Okay, didn't really move very much. So ACN is a pretty good candidate if the volume is good on the options, as well as the liquidity and the bid ask. The other one, FDX. FDX does move around a little bit, but that also means that their options price or the premium is jacked up. Now, I've been watching this one a little bit, jumping all over the place. My tendency at this point is that if going into earnings, we're above that 200, there's a chance it'll go up, but I have a feeling we're probably going to stay right in this range, and it doesn't like to get very far away from its 20. So you know, hopefully the spread of that Iron Condor is not too narrow, because obviously we've been jumping around a lot, and if we got a nice wide Iron Condor, it increases our chance of being on track. Okay, but again, there's been good results over the last 4 earnings, with a pretty high ROI for those that work. And when it doesn't work, obviously, you know, we're looking at a full loss, and that's just the way it's going to be. Just goes into the stats. Okay, so the other things that are reporting, and if I've got them on here, and I just wanted to look at them briefly within the context of this market, because we know that the IV is going to go up. Last week in the recording, I identified Micron. In a lot of ways, I regret not jumping onto a short on this. There's always that coulda, woulda, shoulda. You know, we go back to, when was it? Made the recording on Sunday evening. Monday, we gapped down, and we just kept going down. And I always had the target down here. I think it's a little too late to get in. Chances are we'll consolidate, but we're still jumping around a lot, and I just don't think that there's a great opportunity to go into Micron. IV is already really, really high because we've come down. So if we start actually bouncing and going up, I don't expect IV to increase in a great way going into earnings. So this is kind of like a no touch at this point. What else is reporting? We've got WBA is reporting. This just keeps going down. You know, they're not in good shape. Earnings, they usually do before market open. They're on the the 30th. So that's let's see, that's next week, isn't it? I don't see any reason to be directional on this right now, although we did break this resistance here and it could keep going down. So if we get maybe a little bit of a confirming direction down, there could be an additional play heading down, knowing that IV is going to come into this, but we are getting kind of far off of the moving averages. So, you know, you get that far off and you see that you can actually put on a regression channel onto this. And when you get that far off, you're kind of down towards that range. If we were in the middle of this range, I would definitely say, yeah, I'd like to take this down a little bit further and try to ride that trend a little bit. Right now, it's just not 100% comfortable because there could be a little bit of a jump. STZ volume on the options tend not to be that great. So I tend to stay away from that. The other thing is that we did go up because it's more of a commodity type of based foodstuffs company, the Constellation Brands, and the moving average, while the velocity is going down now, we're still, you know, the moving average is above the 200. We're kind of at a little bit in no man's land here and potentially going into a longer term triangle or range bound. So there is definitely potential if the market starts bouncing that we start going up. But again, I see potentially we're going into this triangle. Actually, I can just use the triangle tool. And I'm really not willing to take this on a non-directional perspective because my ADX is not where it needs to be. If I was going to go do a non-directional, I'd need to have that ADX below 14. Okay, so but this could be worth a shot. But the fact that we have this 200 in the way could affect how much profitability there is available on this, because it could get stopped right there. And if we do start bouncing and going up, volatility, IV is going to start going down. So I think that that's actually kind of a weak opportunity for a pre-earnings type of play. Okay, I'm sure time is okay. Okay, the other one reporting is, let's see, Lennar. Earnings on Condor suck. It's basically split 50-50 over the last year or two. Strong momentum down, obviously, at housing market. I think, me personally, I believe the housing market is the next to crash with the interest rates going up, and that's not necessarily going to be very good for companies like Lennar or Home Depot. We definitely broke resistance down in this area. Okay, so resistance is broke. With earnings coming up really soon, it's just really no opportunity here as far as I'm concerned. Let's see what happens. But when I see things like this in what I would predict as a potentially weak market environment for this type of company, I would love to see it come up, test that, and then confirm coming down. Okay, so then there could be an opportunity there, but the options tend not to be that great on this particular one. The other company reporting is CarMax. Now, this is kind of intriguing. Again, we have the volatility issue, and we got moving averages in the way. But because earnings is coming up, maybe there could be an opportunity there, because there is potentially some room to move. Reporting on the 24th, and it's kind of a lotto shot on this as far as I'm concerned, but there could be an opportunity to bring that up to that, because we are definitely getting a bounce on resistance. There's been previous resistance there. And you can see that acted as resistance in this nice little head, almost like a head and shoulders. So there could be an opportunity there, and there could be an opportunity to play something in a very, very low risk, high reward type of earnings play, over earnings play with what I would term as a directional butterfly. A directional butterfly focused in on these moving averages. And it's not something I'm going to play in the next couple of days, but I may consider giving some kind of lottery type of alert for green goose trader, for the premium green goose traders heading into earnings. And you can see that 98, I'd actually even take that on the 100 side. We know that volatility is going to go down, so when I look at something like this, I would go into, let's see, where is it? Options. Sorry, all screwed up here. My memory is failing. CarMax, KMX, and only if the liquidity is good on the options. KMX, I don't even know if they have weeklies. Yeah, see, they don't even have weeklies. So my tendency is going to be to stay away from this. But if someone wanted to actually take some kind of shot at a very, very low dollar value for maybe potentially a high reward, I would be looking at let's see if I got the right date here. Yeah, 6/17. 86 all the way up to maybe 100 on the top end. I would be looking at, I would bet the volume is really, oh, this volume's not so great, bad. I'd kind of be looking at like a butterfly type of thing right in there, 248, and maybe somewhere around in here, kind of an out of the money type of butterfly. So 750 wide, so that would bring me up to, I see I wouldn't even be able to do that. It'd be kind of like a broken wing type of butterfly, which means that I'd have to come in here. So what would that do for me? It's not great. It's not a great opportunity. 319 bucks, all in type of play, potential to make 681. And if we do go up and volatility crushes into the earnings, then that's going to be a play. But I would have to watch this pretty closely, because IV would have to actually increase quite a bit for me to go into a play like this. Right now, it makes absolutely no sense in going into this type of play, because IV is going to go up, and you're not going to get a major increase in value of the butterfly like this going into earnings. You'd actually have to play this thing over earnings. It's the only way to do it, and take that IV crush. Okay, so. But I do like playing this type of directional play when you have that kind of crush. So it's not even close to being ideal. So, okay, so let's see what else is there. And then we're going to come down to, last but not least, is we're going to come down to Nike. Nike is reporting. Nike's reporting on the 28th. So the question is do we have an opportunity leading up to it to be able to make a play that also is going to increase in volatility? And is there enough room for movement for getting a directional play and also getting an increase in volatility, or certainly an IV that doesn't go anywhere? If the market moves up and the VIX comes down, that brings the IV down, it reduces premium in plays. But if you've got an earnings in the way, maybe the IV will stay constant. We can get a increase in the options if we are directional. Okay, so we are definitely bearish. We're in a bearish trend. The question is, like all the other ones, have we bottomed out? And are we going to get this big drop, small pop, bigger drop, and are we going to fall off the cliff? I'm not so sure that anything is going to happen to Nike between now and earnings. If there's going to be a cliff drop, my gut feel is that cliff drop is not going to happen until after earnings, if it happens at all. I don't want to play over earnings on this particular one, except even the Iron Condor, because this does have a tendency to move. Okay. But if there's an opportunity to bring this up into earnings, then I could be interested. Okay. So what I'm really kind of looking at this point, though, is that we do have a resistance, and that resistance, I'm sorry, that support was resistance in the past. Okay. And you can see that. You can see it very clearly right there. Okay. But is it going to do anything between now and ER? Is a huge question. And is IV going to do anything? So what we have to do is we have to look at the options, and we have to actually we would have to run some kind of play that is going to be very conservative, is not going to lose much if it doesn't go anywhere and IV goes nowhere, and just basically exit at break even or whatever into earnings. So I am willing to take this up, to try to take it up, and I don't see it going much past this 50 right here. But a $10 move is a pretty good move. Even if it only goes up $5, that's a 5% move going into earnings. So I'm thinking that might be a good play. I would love to be able to play something more complex, but this is going to have to be a straight call type of situation. So what I want to do is I want to look at the options now and see whether there's room for movement on the IV based on history. Okay, so okay, earnings is in 10 days. So that's next week. So this also, you know, market's not going to open until Tuesday. There could be an opportunity to play something that would allow us to lower the cost of a play, of a directional play. And that's actually in a calendar. Okay, so what I want to look at first is options that expire next week after earnings. And are they expensive or not? And when I look at this, they're a little bit expensive already. But for $100 stock, $5 for an at the money option is kind of expensive. But what about a 30 delta? And is a 30 delta going to do it? And is there enough volume? There's really crappy volume. You see the 18 delta's got good volume. Maybe people are selling. I don't know. Anyway, you know, you go into something like this. 43 is okay. It's a little high for me. I prefer much prefer the 30, but I'm really looking to manage risk in something that's going to have a little bit higher volume. So that is one possibility. $360. That is a 110. So the option is a 110, which is right there. Or we could get into the 115 with the thought that it might be going up. Okay, so just look at the 115 real quickly. Okay. $1.75. That's a little bit lower risk, a little bit, and you're at a 27 delta, so you're kind of right in there with the deltas. There's actually, the volume is not too bad versus the open interest, and maybe that will grow. And it allows me to go into an all-in type of play. So the next question I have is volatility. Okay, so the IV actually is kind of elevated already, and there's not a huge amount of room for movement of the IV. I mean, you're looking at right now being at 49, and the previous earnings, it went up as high as probably about 60, 63. So, you know, you're looking at you're looking at about a 25% increase, if not less. So, you know, what's going to happen with it? 1.25. How much juice is it actually going to add to an option price if the price doesn't go up very far? And you know, it's got enough juice there, but you're going to have theta kicking in as well. I mean, you got $13 a day of theta. So really, if it goes nowhere, but IV goes up 25%, you're looking at actually almost a break even in an all-in type of play for $175. I wouldn't go more than, actually, I really wouldn't go more than $250. Now, I can also look at the more expensive one, the 110 call. No matter what, we're going to gain if either one of these is accompanying a increase in the stock price. Okay, so I'm going to put the 1.25 in here for IV increase as well, and see how much extra juice is in that. 32%. Okay, so, and then the other thing I look at is I want to look at what's it going to take to double. Okay, so earnings is in 10 days from this last Friday. So if we were in at that price this last Friday, to double, the stock would have to go up to 115. That's kind of high for this one. And then for the this one, the stock would have to go up to 113.94. Okay, so really that kind of shows me that if I were going to go into a position on Tuesday, I'd probably be looking more at the 115 call. I mean, obviously you can go in if you've got tools that allow you to look at other options. Really, I see the best option, forgive the pun, as being something a little bit more out of the money because it reduces my risk, and I'm really only looking to go into an all-in type of play. So this would be my choice. KMX I'm really not too interested in, but Nike I definitely am interested in. I'm going to put a trade plan out on that as a pre-ER play. And we'll probably send an alert out to premium subscribers of Green Goose Trader on Tuesday that I'm going to do that. So that's going to be Tuesday, day 21. And we'll see where it is, but it'd probably be around the first half of the day. Underline NKE, long call, 25 to 30 delta. Right now I'm looking at the let's see, what expiry is that? Expiry is the July 1st expiry. Sorry, NKE JUL 01115 call. I need to see flat to green price action in the first hour day. Entry rationale, pre-ER. Technical stop, I do it one close below, so the daily close, one daily close below. I'm going to say 105. No, I'm going to say, actually, I'm going to say 107. One daily close below 107. Be very conservative about this one. Technical target. Well, we'll just say 115. We're going to try and take it as high as possible. I'm just going to go less than 250. Stop loss. This is all in unless tech violation. Profit target as much as effing possible. Time stop. Exit before ER. ER is, just so we get it right, ER is on 627 after market close. 6:27 AMC. Okay, and there's nothing additional there. Okay, so I've been an hour in this, and make sure I'm on. Okay. And there we go. Okay, so this is our market review. Again, just play it safe. My focus is cash. I might just dip my toes into a few things. You've seen I'm in a couple already. I'm in the Guild. Guild is doing just fine. Nice bullish engulfing candle. Hopefully we come up and I can get out of that and with a good profit. And I'm in also FEZ to take advantage of the potential momentum fall off the cliff. I'm in a longer term option on that one, and we'll see where that goes. But again, these are all in place. Thanks very much. And this recording will be posted to premium subscribers in the next couple of hours.